Hello, good evening. Good evening, good morning, good afternoon. Where are you joining us from this evening? Just trying to set up. Good evening. If you're joining us, can you just please like the live? Can you like the live if you're joining us, please? Thank you. Like and share. How's your day been? My day has been great though. It's Monday, 2nd of February. How's your day been today? How did your day go? Okay. Yes, so I was just trying to set up. Yeah, you're welcome. Depending on the platform you're joining us, either TikTok, Instagram, or YouTube, you're all welcome this evening. It's evening by my time, so I don't know where you're joining from, if it's morning, afternoon, or evening as well. My name is Sifawu, and I'm an investment coach. I basically teach you how to invest in the stock market and build your wealth from the stock market. Just checking that everything is okay. Yes, so today, what are we going to be talking about? We're looking at the stock market, but before we go into the stock market, I got some questions that I received from some people that would like to start investing, and I would like to answer those questions. I think I have about 3 questions here before we start talking about how do you start to invest in the stock market. Okay, so the first question I have here is from Bookie, and it says, will I get people to buy my stocks when I want to sell? That question is coming in from Bookie, and I hope you'll get to see this video. Yes, the answer is yes. Like I used to say, the stock market is a market, right? It's just like you go to a meat market, you go to a clothing store, a clothing market, you go to the shoe market. What do you do there? There's always a buyer and there's always a seller. So it's the same way with the stock market. There are people that are there to buy and there are people that are there to sell. Just like the way when you buy, when you are there to buy, you had somebody willing to sell to you, right? That is because it's a market. That is where the exchange takes place, right? So from the question, will I get people to buy when I am ready to sell? The answer is yes. You will get people to buy when you're ready to sell because it's a market. There will always be buyers and there will always be sellers, especially if you have good stocks, then you will definitely get people that want to buy from you. And the second question I have here is from Tokwe. He said, is it possible to invest in multiple companies at the same time? Is it possible to invest in multiple companies at the same time? And the answer is yes as well. You can invest in multiple companies at the same time, right? You can invest in Apple, Amazon, Google, all of them at the same time, even multiple ETFs at the same time, you can invest in them. So the answer is yes. You're not limited to just one company. It's a market, right? So you go there to buy whatever that suits you, right? If you're going there to buy ETF, that is your preference. If you're going there to buy REIT, that is your preference. If you're going there to buy the stock of an individual company, that is your preference as well. You can invest in multiple companies. So I hope I answered your question, Tokwe. The last question I have here says, how do I know I am making money from the stock market? That is a very good question because why are we in the stock market in the first place? It's for us to be able to make money from the stock market, right? So how do you even know that you're making money, that this your money is actually working for you? Now, for you to know that you're making money, you're having good returns in the market. When you invest in the market, you're going to see the valuation of your stock. So when you see the price of your stock, below it, there's going to be a line. There's going to be something that shows you either it's red in percentage or it's green in percentage. So you might see below, maybe your stock is $50 right now. You bought it for $50. And it will tell you below that $50, you're going to see plus 10% or minus 10%. So if you have the plus, which will show you as green, it means you're making money from the market. That means your capital is appreciating in the market. And if you have the negative, which is the red, it means that you're losing money in the market. However, you do not lose that money until you sell the stock. It is an unrealized loss. It is when you decide to sell, that is when you finally realize the loss. So even if you see red, you're seeing red on your, as in the valuation is showing you as red. If you don't sell, you don't make the loss. The same thing with green. If you don't sell, you don't make the gain. Yes, so those are the three questions that I had coming to my DM over the weekend. So if you have questions, you can leave it in the chat. This evening, we're looking at the stock market. How can you start building wealth in the stock market? I titled today's evening as wealth and stock market, right? How can you start building that wealth from the stock market? That is what we're going to be looking at today. Now, thank you for joining. Yes, so before you start investing in the stock market, why do you want to invest in the stock market? Why do you want to invest in the stock market? There's a question. Do you want to invest because you want to get income, or do you want to invest because you want the value of your capital to appreciate? You need to know the why, because it determines what you want to invest in. That's the first step. Why do you want to invest in the stock market, right? So when you write your why, it tells you the direction you want to go in the stock market. If you want to invest because you want income, you want company that will be paying you maybe every month or every quarter, it tells you the type of stocks you want to buy in the market. If you want to invest because you want to keep your capital there and you want it to grow very fast, you want your money to grow very fast, it gives you the direction you want to go in the stock market. But if you do not know the reason why you want to invest in the stock market, there's tendency that you're just buying anything in the stock market. You're just buying anything. But when you know the direction, that is your first step towards investing in the stock market. Now, step number 2, before we start talking about how you can invest, right? We need to learn the foundation. And this is the foundation that most people do not do, that make them lose money in the market. Because if you're going into the market, my reason for going into the market is that, I've heard that capital can easily appreciate in the market. But I go to buy stocks that are income stocks that pay dividends. Then I'll see that my capital is not growing fast in the market, then I want to sell. And I'll say, I didn't make money in the stock market. But why are you going into the stock market is the first thing. The second thing you want to look at is, what amount do I want to invest? I know on my live stream, I've said it a lot of time, start with whatever you have. And I also say that when you start with that whatever you have is a brick, right? The first is the foundation. You have to lay bricks on it, lay more bricks on it for it to give you that high-rise building. So how do you know the amount you want to invest in the stock market? How do you know? How do you calculate the amount you want to invest in the stock market? Now, let's say you're investing in the stock market towards your retirement, right? You're retiring maybe at 65. You plan to live maybe another 30 years, God willing, right? Now, what you need to do is first start from now. What is your monthly expense? As it stands now, how much do you currently spend as your monthly expense? Everybody, when we retire, want to at least maintain the life you're living now. If you can go above, at least don't go below it, right? So what is your monthly expense right now? Let's say your monthly expense right now is $2,000. So we're going to be assuming that by the time you retire or by the time you want to start using your fund, you're going to be taking $2,000 from your investment every month, because your current expense right now is $2,000 assumption. Now, what you want to do is that current expense multiplied by 12, which is 1 year, right? Your current expense multiplied by 12. So 2,000, for instance, multiplied by 12. Then you want to multiply it by the number of years you want to use to withdraw that money. So if it's 10 years, you can multiply it by, that will be 2,000 multiplied by 12 multiplied by 10, right? If it's 20 years, that will be 2,000 multiplied by 10 multiplied by 20, right? Now that you know the value, that is what you want to have in your portfolio. Sorry, that is what you want to pin a notice of here to contact you. I don't understand this. Okay, so that is what you want to, that's the value, that's the amount you're looking at, that's your end goal. So let's say your 2000 multiplied by your 12 by your 30 is $1 million. So the end goal is $1 million, right? Now the question you want to ask yourself, right? We've said, why do you want to invest? We've said, get the value, the end goal. What end goal are you looking at? Now, the next thing you want to ask yourself is, how many years do I have now to invest? If I have 50 years and I want to invest 1 million, I'll divide 1 million by 50, right? So that I will know what I need to invest, either monthly or quarterly or yearly. I hope that math you understand the math. If you want me to come again, if you want me to explain it again, let me see you put one in the chat. It is important before you start investing at all. Do you want me to explain it again? Let me see you put one in the chat. One. Okay, thank you. So I'm going to start from know why you want to invest. That's the first thing. Do you want to invest for income? Or do you want to invest for capital appreciation? If you want to invest for income, it means you're looking for companies that will pay you every month or every quarter. They pay dividends, right? If you want capital appreciation, that means you want the value you're putting in the market to grow very fast, right? If you want companies that will pay you income, you are going to be investing in different companies. If you want companies that will give you capital appreciation, you want your money to grow very fast in the market, you're investing in different stocks. Okay? If you know that, that is step one, right? Step number two, you want to know, how much do I even want to get at the end of the day? At the end of my 10 years investing, how much is my end goal? So how do you calculate your end goal? Start with, what is your monthly expense right now? So I said, if your monthly expense is $2,000, you owed it. Because we're going to assume that maybe after when you retire or by the time you want to start withdrawing, you're going to be withdrawing that $2,000 every month from your investment, for your investment portfolio. Now that you know that it's $2,000, multiply it by 12, which is 12 months in a year, right? It will give you a value. Now multiply it by the number of years you want to use to withdraw that money. So I want to withdraw $2,000 every month, multiply by 12 months to give me what I'll be withdrawing every year. Now I want to be able to withdraw this amount for 10 years. So that will give me 2,000 multiplied by 12 months, multiplied by 10 years. That is what I want to do, right? So I now said, let's now assume that my multiplication is $1 million. So my end goal is I want to save $1 million in whatever amount of years. But my end goal is, my target is $1 million. Now, how do I now know what I need to save today? What I need to start saving every year, every month, right? It is $1 million divided by the number of years I want to use to save. So if I'm currently 30 and I'm saving towards retirement, that means I have 35 years. If I want to retire at 65, I have 35 years to save that $1 million, which means I am going to divide 1 million by 35. It tells me the amount I need to save every year. Do you get it now? Do you get it now? If you get it, let me see one in the chat. If you don't get it, let me see two. That is the foundation. Do we get it? I'm not seeing any chats coming. Okay. So I will assume that we got it. Okay. Now that we know the amount we are targeting, our end goal, we know we've divided it by the number of years we want to use to save. We now know what we are targeting each month or each year towards our savings. Now that you know that, how do you now start investing? Right? How do you start investing? The first thing you want to do when you want to start investing is you invest in the stock market. The stock market is a place where you go to buy shares of public traded companies. Public traded companies. You become an investor in those companies. You put your money in that company and become a shareholder of that company so that when this company makes money and they are sharing their profits, your name is on the list and you get paid profits, no matter how little you've invested in there, no matter how big you have invested there. If Warren Buffett is investing in a company and you're investing in that same company, as Warren Buffett is getting his income, you are also getting your income. I'm just using Warren Buffett as an example because we know he's the biggest investor, right? So now, for you to go to the stock market, you can't just walk into the head office of stock market and say, oh, the stock exchange and say, I want to buy stock of this company. No, you will need a medium to be able to buy the stock from this company, right? So what do you use to buy? You need a brokerage app. You need a brokerage app. Technology has made it so easy that you can download it on your phone and do your business, do your transaction with the stock market right on your phone. On your phone, you can do your business with the stock market. So you're going to be downloading a brokerage app. That's number one. We're not talking about how do you invest now. We already know the amount you want to start investing. How do you now invest proper? You're going to download the brokerage app. So I'm going to give you different brokerage apps depending on the country you're in, right? Depending on the country you are in. Number one, if you're in Canada, I'm going to start with Canada because I'm in Canada. If you're in Canada, you will download the World Simple. World Simple is very easy to navigate, very beginner friendly. Download it. However, if you don't like World Simple, you can download Questrade. Questrade is more advanced than World Simple, but it's also beginner friendly as well. So if you're in the US, you're going to be using Fidelity or Robinhood. Fidelity or Robinhood is what you're going to be using if you're in the US. If you're in UK, you're going to be using Trading 212. Trading 212 is the app you're going to download from your store if you're in the UK. If you're in Africa, you're going to download Bamboo. Bamboo is what you're going to download if you're in Africa. Evelyn, thank you for the share. Thank you for the like. Okay, so if you're on the call, please, if you can let me like the live so we can bring in more people into the room, I would really appreciate it so that we can all educate ourselves on how we can invest in the stock market. So I said if you're in Canada, download your World Simple. If you're in the US, download your Fidelity or Robinhood. If you're in UK, Europe, download your Trading 212. If you're in Africa, download your Bamboo. Now that you've downloaded it, you need to create your profile on this app. To create your profile, you need your name, you need your date of birth, you need your address, and most importantly, you need your social insurance number or your tax identification number. Your social insurance number or your tax identification number. Why do I need my tax identification number? Because when you invest, it is a taxable item. That is why you need your social insurance number or your tax identification number. If you've done that, check it off the box. We're good to go. The next thing you want to do is you want to choose the type of account you want to use to invest. What type of account do I want to use to invest? Now, it's good for you as a beginner or as an intermediate investor. Start with a non-taxable account or a tax-advantaged account. So when you invest with a tax-advantaged account, it helps you to shield your income from taxes. It shields your income from taxes. So let's say you put $10,000. Mr. A puts $10,000 in the market, invests $10,000 in the market, makes a return of $1,000 from that same market, right? And uses a non-taxable account. It means that Mr. A would go home with the $1,000 they've made in that market. It means they go home with 11,000. Remember, they put 10,000, they made 1,000, right? If Mr. B also put the same $10,000 and earns the same $1,000, but Mr. B has decided to use a taxable account, Mr. B will pay taxes on the $1,000 gain, which means Mr. B's money will be lower. You might say $1,000, $100, $50 is not much, but over time, for somebody that is saving close to 1 million, that is having a return of over 900,000, 10% of that, what will it give you, right? So when you're starting, the charges might not be much, but when you look at it over time, you will know that the charges is much. So start with a tax sheltered account, tax deferred or non-taxable, preferably non-taxable. At least use that room, the room that the government has given to you, the available contribution room. Use it, exhaust it before you start paying government taxes. Now, I'm going to give you different types of accounts that you can use. If you're in Canada, you're going to start with your tax-free savings account. Tax-free savings account, TFSA. For 2026, we all have the same available room of $7,000. We all have the same available room of $7,000. If you've been in Canada over the years and you've not used your TFSA, there's tendency that you have extra room from previous years. But if you want to know, you need to log into your CRA account and it will tell you the available room you have. Okay, now that's TFSA for Canada. If you're in the US, you're going to be using Roth IRA. Roth IRA is what you're going to be using if you're in the US. Okay, US Roth IRA. If you're in UK, you're going to be using Stock and Shares ISA. Stock and Shares ISA account is what you're going to be using. If you're in Africa, use any account. You don't have a tax advantage account. So now that we know the type of accounts we want to use, remember we've opened our brokerage accounts. We know the type of accounts we want to use for our investing. You're not just moving money into this account. The next step is for you to actually invest this money in the stock market. Invest it in the stock market. If you move your money and you just leave it in the account, you're doing yourself a disservice. It's better you keep it in your savings account. If you know you just want to move your money and just keep it in the app, it's better you keep it in your savings account, right? So now that you've opened your account, you've created the account you want to use, the next thing is you want to buy, you want to invest. Now, going back to point one, why do you want to invest in the first place? Am I investing for income or am I investing for capital appreciation? Remember, I said that is the foundation, right? Am I investing for income or am I investing for capital appreciation? Because it determines the type of investment I want to choose. Okay, but now that if we're investing for, so let me explain two types of, you can either do stocks or you can do ETF. Stocks is you buying one company. Thank you for the likes. Stock is you buying one company. I'm investing in Apple. Me, I've invested in just one company. ETF, on the other hand, is you buying a basket of companies. I think I'll get a basket one day, so I'll be able to use it for illustration. Is you buying a basket. In that basket, there are so many companies in it, right? So many companies in that basket. So instead of me investing in just one, I'll be investing in a basket. That is exchange traded fund, ETF. So you can either buy stock or you buy a basket, right? Which is exchange traded fund. Now, if you want to invest for income, you want to invest for income. That means you want a company that will be paying you. You're going to be looking for companies that pay dividends. And when I say dividend, that pays you good dividends. What is a good dividend? A good dividend is when you're paying between 4% and 8%. No risk. Good dividend, 4 to 8%. If you want high risk, you're going to be looking for companies that are paying above 8%, right? That means you're investing for income. I'm going to tell you why. If you're investing for capital appreciation, you're not looking for a company that pays you good dividends. You're looking for a company that has shown tendency to grow, that has shown that this company, the capital, the market, the cost, the price of the stock is growing. That is what you'll be looking for. These are the two types of company you will see in the market. There are some they will pay you dividends, but your capital would not appreciate as fast. And there are some that will not pay you dividends, or they will pay you very tiny dividends, but your capital would grow very fast. Now, why do you want to invest? If you are investing for income and you go to take companies that don't pay dividends, then there will be tendency for you to sell, because you will not see that dividends coming, or you will see very tiny dividends coming and you want to sell. But if you're investing for capital appreciation, and you're saying that your capital is growing about 4% a year, 5% a year, and you're not getting dividends, sorry, you're just getting dividends, then there is tendency for you to sell. Okay. If you want to invest for dividends, what is your best bet? If you want to invest for dividends, what is your best bet? Your best bet that will pay you good dividends is REITs. REITs are your best bet for dividend paying. REITs is Real Estate Investment Trust. Real Estate Investment Trust. Those are REITs. They are companies that are into proper income producing properties. All they know how to do is to get money, get mortgage, build properties, get tenants into these properties, manage the tenants. At the end of the day, when the tenant pays rent, they will pay you. When the tenant pays rent, the landlord, the owner of the company will say, oh, these are all my expenses for this month. This is what is left. Okay, yeah, who are my shareholders? Bookie, Tokwe. And they will start paying everybody, right? That is REITs. They will pay you good dividend. And the reason is because these companies are trust. They are trust. So they don't pay taxes. Government has exempted them from taxes. So in return, government has told them that because you're not paying taxes, your investors, you must pay 90% of your income, your net profit, after you've taken all your expenses off. You must pay 90% to your shareholders. So if you're looking for a company that, if you're in the market for income, you're going to be looking for REITs. There are other companies that pay dividend, but if you want good dividend, underline the word good, then you'll be looking for real estate investment trust companies. Now, you can invest in individuals, or you can invest in a basket of REITs. You can say, oh, I just want to invest in just one company, individual company of a REIT. Or you can say, let me invest in a basket that has REITs in it. I'm going to explain why individual and the risks behind investing in just one company. Now, if you're looking for a company, that will pay you capital, that will give you capital appreciation, you're going to be investing in exchange traded fund. Exchange traded fund will give you baskets of companies. In this basket, you have different companies in it. Different companies in that basket. Now, why is ETF a good investment vehicle? Why is ETF a good investment vehicle as a beginner? As a beginner, why is ETF a good investment vehicle? Number one, it has low risk. I just told you it's a basket, right? So let me use the analogy I love so much. I can go to Walmart today and buy just orange as a fruit. Orange. I go to Walmart, I buy orange, I come back home. Orange in this sense is me investing in a stock, one company. I can go, if I get home and the orange is bad, what happens? I don't have any fruits to eat. But I can go to that same Walmart. Walmart in this sense is our stock market, and buy a basket that has orange, pineapple, apple, watermelon, lemon in that basket. If I get home and the orange in that basket is bad, what do I have? I have pineapple, I have lemon, I have watermelon that I can still take. So what have I done? I've lowered my risk of not having any fruit. That is why if you choose an ETF, you are lowering your risk as a beginner. Another reason why ETF is good is it is diversified. When you talk about diversification in investing, it means you have successfully spread your risk. You have successfully spread your risk. How did you spread your risk? Let me explain. In this basket, you're going to have companies that are into financials, they are in banks, they are insurance. In this basket, you have companies that are into technology, the Apples, the Metas of this world. In this basket, you have companies that are into consumer goods. In that basket, you have companies that are into telecom. In that same basket, you have companies that are into hospitality. Now, if technology is not doing well in that basket, remember the analogy of the fruit, right? Orange is bad. You have telecoms, you have consumer goods, you have hospitality still in that basket. So you've spread your risk across board. That is why ETF is good as a beginner. Now, that's reason number two. I said number one is you lower your risk. Number two is you've diversified your risk. Number three, it is managed. When you say something is managed in the stock market, it means somebody goes to the office, just like you go to do your 9 to 5. The person's job is to look at this portfolio, this ETF, and say, oh, this company, does this still meet my requirement? Yes, leave it there. This company it doesn't meet my requirement again, take it out. Bring another company that meets that requirement there. Somebody goes, a professional sits and manage that portfolio. So they've done all the job for you. They've done all the job for you. Yours is just to come into the market and invest in that basket, right? Yours is to come into the market, invest in that market. Do we understand up to this point before I go ahead? Do we understand? I still have one more reason to give. If you can let me like the live, thank you, and share so that we can have more people come into the room, I would appreciate that. Do we understand? Yes, no, no, yes, yes, yes. Thank you for the likes. Okay. So I'm not saying anything, but I assume we understand because silence means consent. Okay. Now, the fourth reason is you're buying with just one fee. So even if thank you so much, Tiobi. Even if the company, if that basket has, thank you, Lo, thank you for confirming. If that basket has 1,000 companies in it, they will tell you this basket is only $50. It means if you buy $50, if you pay $50, you have access to everything in that basket. They are not going to calculate that, this company is $2, this one is $5, come and pay. No, they'll just tell you for this one fee, you have access to everything in this basket. So that is why when you invest in an ETF as a beginner, it's good. It helps you to lower your risk. It diversifies your risk. It is managed and you're paying just one fee when you start investing. So let's look at an ETF. And I said, if you want to do capital appreciation, go for ETF. If you want to do income, your best bet is REITs, Real Estate Investment Trust. Real estate also has a basket, so you can buy the basket as well. Now, let's look at the most popular ETF that most people must have heard about, which is S&P 500. S&P 500 is a US stock, is the top 500 company in the US stock exchange. So when you look at the US book, US New York Stock Exchange, you look at the books number 1 to 500, that is what is in that basket of S&P 500. S&P 500, that is what is in that basket. Now, averagely, S&P 500 came into existence, I think 1953 or 1963. I don't know the exact year now. But averagely, since inception up to now, S&P 500 has done an average of 10% every year. Average. There are years that it did more than 10%. Last year is an example. S&P 500 did about 17% last year, right? If you invest, let's say let's say we take the average, which is 10%. 10%. Let's say you invest $10,000 in S&P 500 and it did the average, which is 10%. It means that at the end of the year, at the end of the 12th month, you would be having 10% of $10,000. That is $1,000 as your return, as your income in the market. Now, remember, just put that 4 criteria in mind. Low risk, diversified, managed, one fee. What investments would give you 10% return in 1 year? There's no risk. You don't need to, you can invest now and just go and sleep, right? No risk. It's managed, somebody is actively managing the portfolio. It means if your company was number 490 this year, this quarter when we are reviewing it, or this half year when we are reviewing it, the following time we want to review it, your company is now number 600. What do? We take your company off and they bring another company into it because you do not meet the criteria. For you to be in that basket, you must be number 1 to 500, right? You must be number 1 to 500. So that is why it's actively managed. So let's say you now invest in that S&P 500. In 1 year, maybe the 10%, the average that we've seen. That means your $10,000 at the end of the year will be about $11,000. Now, there's tendency for your money to work extra hard for you. Like I said, S&P 500 is what everybody wants to invest in because that is what is out there. There are so many ETFs that does more than S&P 500 in the market. Cheaper than S&P 500, good stocks, and they do more than S&P 500. But like I said, this class is for us to learn how to invest. If you want to invest in S&P 500, if you're in Canada, you're going to be looking for the ticker symbol VFV. VFV is in Canadian dollars. Good evening. I'm seeing a question. Good evening. Adane, good evening from my end. Where are you streaming from, please? I'm in Canada. Evans, I'm in Canada, okay? So if you want to invest in S&P 500 in Canada and you want to invest in the Canadian dollars, you're going to be using VFV as a ticker symbol. Remember, you've downloaded your app, you've created your account. Now it's now time to invest. You're going to be using VFV as the Canadian, as a ticker symbol. I have another question coming in and it says, can you lose your capital in S&P 500? Good question. I'm coming over to that. Number 2. Okay. Yes, so I'm having questions pouring. That's why I'm pausing. Okay, just a minute. So let me just, before I go ahead, if you're in the US, you're going to be looking for VOO. That's S&P 500 in the USD currency. If you're in UK, you're going to be looking for V as in Victor, USA. That's the S&P version in pounds. If you're in Nigeria or Africa, you're going to be investing in the US version, which is VOO. Okay? That is a ticker symbol for S&P 500. But like I said, there are stocks that does more than S&P 500. I have another question coming. It says, can I lose my capital in S&P 500? The thing is, S&P 500, can you lose your capital? There's tendency for you to lose a bit of it. And the only way you will lose is, let me tell you, when you put your money in the market, like I explained initially, I put my $1,000 in the market. In my app, I'm going to see $1,000. That this is my investment, $1,000. Below that $1,000, it will tell me my market valuation as at today. And it will tell me you're making plus 10% as at today. That market valuation will keep changing depending on markets as the market is fluctuating. Or it will tell me I'm making a loss of 10%, right? Or 100% loss, depending if you're losing your capital. However, if you don't want to lose that capital, don't sell when your account is red. Because you have not lost that money until you hit the sell button and you submit your sell request. That is when you lose your money in the market. But can you really lose your money in S&P 500? I will say no, you can't lose all your money. And the reason is, when I say you are looking at top 500 companies in the US, for you to lose your money, what will it tell you? Those 500 companies have gone, they have liquidated, right? Now, if the top 1 to 500 has liquidated, what will happen to the remaining 3,005 that are below? That means all those ones have gone long ago. They've gone long ago before the top 1 to 500 would go, right? And it means there's no more economy in America. That means American economy is finished. So you can't lose your money in the risk sense. If you are investing, no, not if you are trading. If you're trading options and the like, you're doing day trading, you can lose your money. But if you're investing, you're buying, you're owning, and don't sell if you see that negative, don't sell, because you have not realized the loss until you sell off your stock. That is when you realize the loss. I hope I answered your question, Toby. Crypto Lord says, just came across you now. I am in Canada. Where can I invest 1K? The first thing for you to do is to download your brokerage app. You can download Wealth Simple. If you need a code, my code is there, 58CJJQ. It gives you $25 if you move money into your investment account within 30 days. That is where you're going to be investing. Now, if you want to know what you want to invest in, like I said, are you investing for income or are you investing for capital appreciation? Income, look for REITs. Capital appreciation, look for ETFs. Okay? That is how you're going to, what can I invest my 1K in? You can either invest into REITs or you invest into exchange traded fund. For now, as a beginner, I don't really subscribe to you investing in individual stocks. And the reason is individual stock can easily fluctuate. There's tendency, you don't know what you're checking for before you invest. And there's tendency for you to lose your money when you invest there. So Evan says, I hope I answered your question. If you need more clarification, Crypto Lord, let me know. Evan says, really, I'm in Canada as well. I'll send you a DM for more sensitization. Okay, that's good. I will expect your DM. Olowo says, what's up in Canada? Wealth Simple, very beginner friendly. Wealth Simple, very beginner friendly. If you need my code, that is my code up there. It gives you $25 when you move in your fund within 30 days. And thank you for the follow, Adeniyi. Amara says, I'm in Europe. If you're in Europe, you're going to be using Trading 212. Trading 212. I don't know the part of Europe. If Trading 212 is not in your country, then you're going to be using Interactive Brokers. Interactive Brokers. On your app, you will see it as IBKR. On your app, that's the short form, Interactive Brokers, if there is no Trading 212 in your country, in Europe. Yeah, thank you for the follow. Okay, Toby says, yes, I did. That means you understand my explanation. Okay, so I said you can invest in ETF, right? And I said S&P 500. Now, most question is, oh, thank you so much. Thank you for the compliments. Yes, so most question I get is, how much can I start investing with? How much can I start investing with? You know, when I started, I said, set your goal. What is your end goal, right? And we'll break it down, walk back to how much can I even invest to be able to hit that my goal? But what if my goal is to save 20 million in 10 years? And I've done my work done, I've done my reverse engineering, and I see that I need to save $5,000 every month, but I don't have $5,000. Will I not save or will I not invest? You can start with whatever you have. Start with whatever you have. In fact, I'm an advocate of if you're starting your journey, because when you want to start investing, it's just as if you want to start a new journey. It's as if you want to, like, you're moving from your home country, just like when you were relocating to a new country, right? You didn't know what to meet. You were just going there with faith. And most new investors, that is, oh, I don't know what I will meet in this market. I've read a lot about the market. I don't know what I'll meet. So I say, start with your 1 hour pay. If you know your mind is still shaking. I work for 40 hours every week. Start with 1 hour pay. My 1 hour pay is $20. Start with $20 every week. So from your 40 hours, just say, okay, this 1 hour from 40 hours, I'm going to put it in the market, $20. Now, if you put it in the S&P 500, for instance, S&P 500 does average 10%, right? At the end of, you're doing that $20 every week. At the end of 52 weeks, do you know what you have? You would have $1,040. That's 52 multiplied by $20. If you now invest in S&P 500, for instance, 10% averagely, that means 10% of your 1,040, what did it give you? $104. You didn't have to know the MD of any company in that S&P 500. You didn't have to know if the company worked or not. You didn't have to go and look for the workers in that company, if they came late to work or not. You didn't have to do anything. Your money was just doing what? Actively working for you. Your money was actively working for you. Now, that is you investing in just S&P 500. And I told you there are so many stocks that do more than S&P 500. Like the stock I give you in my community, it will give you an average of 36% return. An average. I'll give you 8 ETFs that will give you average of 36% return. Now, imagine that same person. No, person A decided to do S&P 500. Oh, let me just stay on my lane, day on my day, right? They'll still go on with $104. But person B decided to take the 36% one on the same 1,040, 36%. I can't calculate the 40 on it, but let me just 36% of 1,000. That is $360. What have both of them done? They are in the same market, the same time, but one has used leverage. The other has decided to follow Bogboiru, which is S&P 500. Okay. So I'm just going to read some more questions here. I'm in Canada. You're doing great. Thank you. What is the ticker symbol for Canadian S&P 500? Canadian currency. V as in Victor, F as in Frank, V as in Victor. VFV. That's the ticker symbol for the Canadian currency for S&P 500. Okay. If you have questions, you can leave it in the chat or you can come up to ask your question. So I said you can start with any amount you have. So someone would now say, I'm in your mind though. I'm reading your mind. Someone would now say, how do you want me to, the S&P 500 I'm seeing now is even, I think S&P 500 should be about 160 something today. I've not really checked today, but it's about 160 something. It's always hovering between 160 something and 170. S&P 500 is even 160 something. And you're telling me to invest with whatever I have. Okay. So the app has made it so easy for you to invest because the app has given you the grace to buy fraction. The grace to buy fraction. That is why I tell you, I'm just trying to charge my phone. Okay. That is why I tell you that you don't have an excuse for you not to invest at this time. You don't have an excuse for you not to invest at this time. I'll tell you, before now, if you want to start investing, thank you for the follow. If you want to start investing before the advent of technology, what do? You get a registrar. You go to that registrar, you fill your form. The registrar will take it to the clearinghouse. After taking it to the clearinghouse will do their and tell you, okay, they've allotted the shares to you. The registrar will come back to you and give you your shares. This might take you 1 week. In that 1 week, price may have moved. Price does not sit in stock. In one day, when you look at the chart, you'll see it like this, right? In that 1 week, just imagine the kind of price change that would have happened. But now, with the advent of technology, while you are seated, as you are on this call, some people would have downloaded their app. Some people would have started their investing journey. Just that the market is closed right now. But if you put in your order, tomorrow morning, once the market opens, what do? You just see the alert. You just hear the notification. Your order has been filled. Except you want to buy after close hours. And don't buy after close hours. It's always good to buy during market hours. Don't buy after close hours. Right? It's always good to buy during market hours. Right? So, you can invest that small, buy the fraction. I don't have 170 to invest. It's not an excuse for you not to start investing. You have $2, put it in the market. Buy a fraction of that share. You have $5, put it in the market. Buy a fraction of that share. Buy a fraction of that share. Technology has made it that easy. Technology has made it that easy for you to buy. I used to give an example of, let's say you go to the store today and you see a very beautiful top. You know, there's something just emotional buy, like impulse buying. This top is so lovely. I don't want to leave it. You know, there's tendency for you to get home and you just be feeling guilty. You'll be feeling guilty. Oh, but this one was not in my budget. I didn't even plan to buy it. So how do you make yourself happy? When you go to the store and you see that kind of beautiful top like that, how do you make yourself happy so that you don't beat yourself up when you get home? You can invest that same amount in the stock market. So what happens as the cashier is giving, as you're doing the checkout at the cashier point, just bring out your phone, right? Open your brokerage app and say, okay, transfer $50 into my investment portfolio and buy this particular stock. When you get home, if your mind is now making you feel guilty, I shouldn't have bought it. You now remind yourself, I have to have put $50 to in my for my future, and your mind will calm down. That is what technology has done to us, has done for us. Okay, so you can start with any amount you have, but you need to know what you're doing. You need to know what you're doing. You can do the barest minimum, which is the S&P 500. Everybody talks about S&P 500, and it's a good portfolio, to be honest. Like I said, before the S&P 500 would crash, that's the top 500 company in the US. It means all the other ones that are below, the global that are below, they've already gone, and it means there's no more US economy. There's no more US economy. That's what it means for the S&P 500 to decide to pack up, right? So it's not that it's not a good portfolio, but that is the barest minimum. It's the barest minimum. However, you can do better. You can make your money work extra hard for you. So I'm just going to be running some figures. And if you want me to run for you, let me just run from some figures. Somebody that is investing in just S&P 500 and somebody that is investing in a community that has about 36%. All I need for you is just two values. If you want to tell me, let's say you want to tell me the amount you want to invest and the number of years you would like to do it. So let's say 150 for 10 years. Let me see it in the chat. And I will run figures and you see the difference between you doing 10% and you doing 36%. Is there anyone that wants to put it in the chat while I open my investment calculator? So I'm going to be using investment calculator. You can use it as well. It's on Google. Is anyone putting it on the chat? Is there anyone putting a figure on the chat? I want to do $150 for 10 years. I will start. $150 for 10 years. So I'm using investment calculator, just like I said. I'm going to be doing $150 for 20 years. Okay. So I'm starting with $150. I'm investing for 20 years, and I'm going to get a rate of return of 10%, right? 1K for 2 years. 1K for 2 years. That means you're doing 1K every month for 2 years, Crypto Lord, right? 1K every month for 2 years. Now, when you're investing, you need time as well. Okay. 1K every year for 2 years. Let's say you're doing the S&P 500 at annual rate of 10% return. You're doing 1K every year. You need time for investing. I'm going to tell you that. Okay. What is that? Okay. So 1K every year for 2 years. It means at the end of the 2 years, you would have invested $24,000. You would have invested $24,000, 10% return. At the end of the 2 years, you'll be going on with $27,000. You need time. Time is also a factor when you're investing. That means you'll be going home with $27,000. That means how much gain, as in how much return have you made in the market? That's about $3,000 in 2 years. The truth is there's no investment that will give you that. That is low risk and the likes, right? So let's now say you join the community and you do the same $1,000. $1,000 for 2 years at 36%, for 2 years at 36%. I'm using investment calculator if you want to punch it as well. You will still do the same $24,000 as your investment, but you'll be going home with $34,000. $34,000. It means $34,000. That means your gain is about $10,000 compared to every other thing is the same. It's just the rate of return that is different. You're investing $1,000 for 2 years. One is at 36% and one is at 10%. Then you'll be the difference is about $7,000 more when you're doing the 36% one. So let's now say you're even doing this $1,000. Anybody that wants to put it on if you have another figure, you can put it on the chart and we can run it together. But let's say you're investing this same $1,000 and you're doing it for 10 years. So let's look at what time can do for you in the markets. When you have time to invest, when you leave your money for a long time, what compound interest can do for you. So we're doing for 10 years, right? The same $1,000 every month for 10 years. That means at the end of 10 years, you would have invested $120. Yes, VFV. At the end of 20 years, you would have invested $121,000. That is what you would have invested at the end of 20 years. Thank you for the follow. Now, at 10% return, right? We're just doing the Berry S&P 500. At the end of 20 years, you'll be going home with $202. That means 120 minus 202. That's about $82,000 in gain. In gain. Now, you didn't need to know the MD of these companies. You didn't need to know the people that work there, right? In gain. But let's now see somebody that is doing that same thing for 36 years, 36%. The person will be going on with $817,000. The person did the same 120,000K as investment, but the person is going on with $817,000. That means 817 minus 120. If I add 3 to this, that means the person is going on with about 797,000 as gain. So you can see what time, when you have time in the market, it gives you more leverage. It enables your money to compound very well. However, if you don't have time, is it that you will not invest? No, you will still make gain. At least when we did that 2 years, right? We are still able to make gain. There was a gain of $3,000. What investment will pay you that kind of money and is low risk and the likes, right? Or if you do the 36% one, you make about $10,000 gain in that 2 years. But I'm just saying that when you do time, when you have time in the market, when you're able to work with time, you get more. And that is why if you have children, now is the time to start investing for them, because you set them up for life. In short, let me even tell you about my class that is coming up 14th of February. So what is the best Valentine gift you can give to your child or your ward that is about between 18 and 25? I said 18 and 25 because they are teen, they now know how to manage their money, they earn for themselves. So you're not the one investing for them. They can open the brokerage app and learn, right? Learn the skill. So on the 14th of February, I'm going to be hosting a class. It's called the Mindset, the Foundation, Wealth Foundation. In this Wealth Foundation class, all we're teaching is your money mindset, because money is a mindset. You want to be rich? It's a mindset. You want to be poor? It's a mindset. We're going to be teaching the mindset, because at this age, they're just forming, they're just understanding life. No mom is there to tell them, oh, come and do this, right? They are now becoming an adult. So 18 to 25 is just 50 Canadian dollars. And I decided to discount it for them because I know that maybe their parents will still be paying for them. But what Valentine gifts can you give to your child that is more than them learning how to build that wealth? A lot of us, we didn't start building wealth on time. Me, I started though because my parents, and I'm so grateful that my dad understood money. So right from my age 12, he taught me about money. Age 12 was when I first read The Rich Dad Poor Dad, The Richest Man in Babylon. And I understood investing. I had my first business when I was about 14. And what did I do? I was selling pure water from my dad's garage. I didn't work, but in my community, we're like almost the only people that had freezer. And every weekend, people come to our house to put water in our freezer and take out block. And my dad is a business person. He's an accountant. He said, you can be doing this as a business. All you need to do is we'll call the pure water company. They will drive to our house, supply the bags of water, just load it in the fridge and sell. And that was what I was doing. And I can tell you that I was the biggest girl in that house, because if I don't want to wash plate, I won't wash. I have money to pay for people to wash for me. So that is what money. So that is what we're going to be doing on the 18th, on the 14th of February. So if you have kids, you want them to learn about investing, you want them to build the skill, you don't want them to end up like 95% of their counterparts, then register them for this class. It's just 50 Canadian dollars. If you need the link, let me know. So Nelson says, the longer you stay in the market, the better for you. Investing is a long-term goal. Perfect. There's no any other way to say it. In short, let me clap for you, Nelson. Let me clap for you, because there's no any other way to say it. The longer you stay in the market, we just saw it, right? The better for you. And Crypto Lord says, the 36% no risk, there is no investment that is without a risk. But I'm telling you that this is a portfolio that people are managing, right? There's no investment that is without a risk. When an investment, we can say S&P 500 today averagely does 10% because we've seen it do it over the years, right? We've seen it do it over the years. And if they've done it over the years, we are projecting, based on past performance, we are projecting that it can do it again for another year, right? So the one we give to you in the community, we've seen that they have the capacity to do a cumulative return of about 36%, right? If they've done it before, there's tendency for them to do it again. So there's no investment that is without any risk. If anybody tells you that there's an investment that is without a risk, run. Run. There's no investment without any risk. However, remember I said, you have not made the loss in the market if you don't sell. If you don't sell, you have not made that loss. If it's a good company, last week, there was crash in the market, right? A lot of people took profit from the market last week. And what happened? Price dropped. Price drops. And you know what? 2 weeks ago, before last week, that's 2 weeks ago, a lot of people are saying, go and buy gold. Gold did well. Gold did well. People rushed into the market with emotion. People that didn't really understand the market, right? You will rush into the market with emotion. Last week, there was a drop, like 10% drop in gold. What would that person do? The person has invested $1,000 2 weeks ago. When they told them, gold is doing well, it's doing 70, gold did 72% last year. Oh, gold is doing well. He went to buy gold with $1,000. Last week, there's a 10% drop. He's now seeing the $1,000 is looking like $900 on their portfolio. What will you do? You know that you have not made the loss. It's just telling you that if you sell now, it's like a warning. If you sell now, you will make a loss of 10%. It's a warning. That warning does not come into effect if you do not sell. So if you just see the warning and you say, okay, no problem, let me be looking at it, it will be there and your money will grow back once it starts appreciating. But there are a lot of people, the people that rushed into the market with emotion will jump out again and say, stock market, it's not for me. Stock market is not for me, because they rushed into the market. So they'll do what? They will jump out because they don't really understand the market. That is why you need to learn the skill. Take your time. You can either take your time to learn the skill, or you can pay to learn the skill, shorten your learning curve. and learn the skill so that you do not panic. There will always be ups, there will be down. He says my heart did beam. Toby says that's good. And my heart did beam. S&P 500 dropped last week as well. But today it has already started going up. Today. And if those people, if you had jumped into the market and jumped out last week and made loss, there will be somebody there that will make gain. There will be somebody there that will make gain. For every loss, there's somebody on the end or the other end that is making the gain. Because for every debit, there must be a credit. There must be a credit for the book to balance. So do you want to be in the group of loss? No, right? So, but when you don't sell, even when you're seeing that the value is already depreciating, if you don't sell, you don't make a loss. When the value appreciates, you sell, you can take profits. You wait again. When the value comes down, you buy. Right? And one more thing. Now, if you want to start, like I said, you need that time in the market. But if you don't have the time, start now. The best time you should have started was 2 years ago, was yesterday. But the next best time is now. If you've not downloaded your app and you're on this call, download your app. That is the first stage. If you download the app and you put it on your phone, there's a mindset behind it. The mindset behind you downloading that app alone is whenever you scroll through your phone, you see that app. It reminds you that you need to start investing. But if you don't download the app, there's nothing now. There's nothing that is staring at your face. Until maybe next time you scroll through the live show and I'm here, you say, oh, I was supposed to download one app. So even if you're not starting this night, download the app. It doesn't cost you anything. $0 to download it. You don't need to put any money there. Immediately you download. $0. But even if it's $10, do you have it? You can't tell me that you've not spent $10 this year, that you can't remember what you spent it on. You spent $120 this year, that you can't remember what you spent it on. There's somebody that has called you from home and say, urgent 2K. Urgent, yes, now. Urgent 2K is $20 now. Am I right? Yeah. Urgent 2K. And just say, Ashebi, it's just 2K. It's just 2K now. Send to them. Right? Urgent 2K. Send to them. Okay. So I have another question coming in from Toby. It says, so do you advise that we take profits when our ETF has profits? The truth is, I really invest for the long time. That's my own. I really invest for the long time. But if you're so scared, you can take profits. If you're so scared of the market, you can take profits. But for me, I invest for the long time. Okay. Now, and I want you to also know that the wealthy will not put their money where they will not make money. So if the wealthy puts their money in the stock market, what does it tell you? It tells you there's money there to be made. That's why the wealthy will put their money there. Have you seen a wealthy person that will put their money in a place that they will not make money? It's not possible. They will want to make money from it, right? They want to make money from it. So they will put their money in the stock market. It tells you that there is money in the stock market. There's money to be made in the stock market. What the wealthy will do is they will employ people like financial advisors that will manage that portfolio. But you as a beginner, why do you want to employ a financial advisor when you can learn the skill and teach it to your spouse, teach it to your children, teach it to your children's children? Instead of paying a financial advisor 3%, 3% every year might be small now when your portfolio is not much. But over the years, by the time your portfolio becomes $1 million, 3%. By the time the portfolio becomes $2 million, 3%. You see that it's much. But you can learn the skill now. And we're all going to the same stock market. The stock market that the bank is going, the stock market the insurance company is going, the stock market that everybody, Warren Buffett, is going, is the same stock market we are all going to. It's the same stock market. If it's going to Toronto Stock Exchange, I'm also going to Toronto Stock Exchange to buy. If Warren Buffett is going to New York Stock Exchange, I'm also going to the same New York Stock Exchange. There's no two different stock markets. It's the same stock market that we are all going to buy from. So learn the skill. Learn the skill. Do we have questions coming in? Okay. So what have we learned in today's class? We've learned that you need to open your brokerage app. You Thank you for the compliments. I'm doing well. Let me clap for myself. Okay, so if we've learned that we need to download our brokerage app, we need to choose an investment account. I said choose a non-taxable account or a tax-sheltered account. And we've learned that we can either buy the REITs for income purposes or we can buy the ETF. And you can do a combination of both. Like me, I do combination of both. I have REITs and I have ETFs as well. And I also have individual stocks. So it's not just REIT and ETF. I have REIT, I have individual stocks, I have gold, I have silver. But if you're a beginner, start with. If you want income, choose REIT. If you want capital appreciation, choose ETF. Then see how it's growing. It builds your mindset. And one more thing about investing. Before I say that, let me say, Nelson, how much profit is considered good profit? It's better to leave it to compound the long term. Yeah. It's good for you to leave it to compound the long term. But if you're so scared about the market, take profits and leave others and see how it will go. But as you're taking the profits, you're also reducing your money in the market, right? You're reducing your compound, the rate at which it can compound. So I wanted to say something. Okay. Now, when you start investing, there's a mindset behind it as well. So let's say you put your $1,000 in the market and you're seeing it grow by 20%. Do you know what you want to do? You tell yourself, even the 9 to 5 I'm working every year, they don't increase my salary 9 to 20%. I mean, is there any company that increases salary by 20% when you didn't get promotion? You just say, okay, this year I want to increase our salary by 20%. I'm not saying sure. But you're saying your money is working for you 20%. You know what it will do to you? You want to put more money in the market. And when you want to put more money in the market, what does it do to you? You're looking for, oh, how can I make extra money so I can put it in the market so that my money can grow fast? What does it do? You can see the effects. It opens up your mind. It opens up your mind. And the opportunity that you've been seeing all this while, that you've been passing, that, there's nothing in this community. This community is so small. I live in a very small community, but I don't believe there's nothing there. Oh, this community is so small. There is nothing. People are complaining, but because your mind is, how can I make more money so I can put more money in the market, make my money work for me? That opportunity that you've been passing over repeatedly, you will just see it. It's true. I can make money from this. You started investing. Now you're looking for, because your investing is growing, you want to make more money to put in the market. You're asking yourself, you're challenging your mind. How can I make more money? Because you're challenging your mind, everything you see, you try to look for the opportunity in it. Even though you've been complaining about it for several years, you start to see the opportunity in it that, I can make more money from this, right? I can make more money from this and start investing. Okay. So we said you can either do REITs. REIT is real estate investment trust. You're investing in real estate. And our community, I speak to people of my skin color. Our community, we like to be landlords. You will see somebody saying, I'm working 5 shifts because I want to go into real estate. I'm working 10 shifts because I want to go into real estate. Stock marketer said, don't work 10 shifts again. Come and start investing in real estate in the stock market with any amount you have. Nobody cares whether you have that huge down payment. Nobody cares whether you have a good credit score. Nobody cares whether you have that debt on you. The stock market does not care. The stock market does not care. So if your goal this year is, I want to earn real estate income, that is why I have to take 16-hour shifts. That is why I have to work double job. You don't need to work that double job. What do you want to earn? You want to earn real estate income. How do you earn real estate income? When your tenant pays you rent, right? Your tenant pays you rent every month. That is the income. The second way you earn real estate is when your capital appreciates. The value of the house you buy increases by the time you want to sell, right? Those are the two ways you're earning. You're going to earn that same way when you invest in real estate investment trust, because real estate investment trust will pay you dividends. That is your rent. Your capital will appreciate in the market. I put $20, it's now $30 appreciation, $10 appreciation. That is the when you sell your house, right? Now, do you need that huge capital? No. I don't need that $60,000. I don't need that $30,000 closing cost. That is what the stock market has done for you. I don't even need the headache of being a landlord. Nobody will need to call you in the morning. Hey, madam, please, my sink is no longer working. Can you send a plumber? And I start looking for plumber where you are still getting ready for your night. Nobody has to tell you. You don't need to know the tenants. You don't need to know the tenants for you to be able to earn it. Now, am I saying real estate is not good, like your physical property? I am not saying so. I love to have real estate as well. But what if I don't have the down payment yet? What if my credit score is not good yet? What if I still have this debt on me and my interest rates will be so high? There's an alternative for me to be able to achieve that goal. The main aim is for you to achieve that goal. And what do? You use the real estate investment trust to achieve the same goal as if you want to be a landlord. Okay, I hope I didn't confuse you. So Toby says, is your capital safe in REITs? Like I say, real estate, stock markets, you can't guarantee that your capital is safe. You can't guarantee that your capital is safe. But you've seen real estate companies that have been around for 50 years, for 60 years. They've not gone anywhere. So where are they going? There's a real estate that has 15,000 properties. 15,000 properties. This real estate company pays every month. So before the 15,000 property will go away, they are not going anywhere. But will you say the 100% guarantee? If you want 100% guarantee, go and invest with the investment insurance company. They will give you guarantee with segregated fund, but they will charge you. They can tell you guarantee 50%, guarantee 70%, guarantee 100%, guarantee your capital, but it's going to be segregated fund. Segregated fund with the insurance company, but they will charge you. But if you invest in good company, you hold it. The main aim is buy and hold. If you buy and hold, so a company you want to invest in, look at their chart in the last 1 year. Look at their chart in the last 5 years. Look at their chart in the last 10 years. Are they growing? If they are growing, it tells you that there's tendency for it to grow again. That is it. I hope I answered your question. So Bobo says, can this work in Nigeria? Yes, sir. It can work in Nigeria. You will need a Bamboo. Download Bamboo. Bamboo is the app on your Apple Store or Play Store. Download Bamboo, create your profile on Bamboo. If you want to invest, you're going to be investing in the US stock. US stock. So let's say you want to do the S&P 500, you're going to be doing VOO because your Bamboo mirrors the US stock exchange, right? It mirrors the US stock exchange. Okay, so let me now sell my class. Hey, Enikoshola, thank you for joining. So now that we know that we can invest, you can still continue to do it the same way. I've given you steps this night that if you want to start, you can start your journey. However, if you want, can I hire you for my investment? I'm here. That is why I'm here. I'm here to mentor you. I'm here to mentor. I tell you I'm an investment coach, right? Let me tell you my story let me market my class before I tell you my story. So if you want me to hold your hands, like you want to learn how to invest, you want to build the skill, like I tell you that investing is a skill. It's just the way you go to school, right? You go to school to learn accounting. I learned accounting in school. I studied accounting in school. If you wake me this day, so who is this now? What are you writing, sir? Hey, God, have mercy. What is this person writing on this board? Let me just block the person, I beg. Obviously, you don't know what the person is writing. Okay, so If you want me to hold your hands, I have a pre-recorded class that you can get from the link in my bio. So if you're on TikTok or if you're on Instagram, you can just go to the link in my bio. Some people are just sick. I tell you, because what is this one that the person is writing now? I don't know. So you can go to the link in my bio. Just click my profile picture and go to the link in my bio. You'll see my pre-recorded class. It's just $79. $79, and you would learn everything about the stock market. Some people will tell you they will teach you ETF separately, they will teach you REIT separately, they will teach you dividend stock separately. No, I teach you everything in that package, including how to know your profile. Then you get the 8 stocks that I just told you that will give you about 36%, and you can start your investment journey. It's just $79. If you want, maybe you started your investment journey and you just want the 8 stocks, the 8 ETF, before you've been investing in just the one that gives you 10%, but now you want to invest in the one that will give you about 36%, then I have it there as well. Just the list of the 8 stocks. That means you already understand the stock market and the likes. You don't want to learn anything. You just want to collect the 8 stocks. Then you go and invest yourself. Then I have it there. I think it's for $37. Just gives you the 8 stocks. It gives you more than 8 stocks anyway. It gives you the 8 ETF that will give you 36%. It gives you 9 stocks that comprise of the stock market, like every asset in the stock market. You have ETF for gold, ETF for silver, ETF for Bitcoin, ETF for regular ETF for REIT, everything in that. And you have it in US version, Canadian version, and UK version, right? That's for $37. If you have a child, or you have a ward, or you have a friend that is between 18 and 25, and you want them to build a mindset for investing, you want them to understand money at this early age, right? I have a class coming up on February 14th. It's a live class where we're going to set your goal. You set your, as in build that mindset, right? I told you if you want to be wealthy, is mindset. If you want to be poor, is mindset. Build the mindset, and you also learn how to invest, right? That is coming up on the 14th of February, Valentine's Day. I decided to, 14th of February is what? 14th of February is a Sunday, right? Oh my God, it's supposed to be 13. I need to change that. Oh, thank God I was booked this evening. No, 14th is a Saturday. I'm right. 14th of February, right? What a good Valentine. Thank you. Is a Saturday. 14th of February. What a good Valentine gift you can give to your child, to your friend, to your ward, for them to start building their portfolio now. We can see when we check time in the market, right? Somebody is doing 2 years and the same person, another person is doing 10 years. You can see the difference. Just imagine that the child starts investing at 18. By the time the child is 40, the child might not need to invest again. The child can even comfortably retire at that age, right? Even if it's only $50, only $100 they were putting in. So if you need that, you will need, the link is also in my bio. Yes, now that is why it's Lovers Day, because you love your children, because you love your family. That is why. So Enikosola is saying Lovers Day, you need to look after that date. Oh, right. I deliberately chose that date because I know you want to buy gifts for your children. You want to buy gifts for your friends. You want to buy gifts for your wards. So what best gifts can you give to someone other than you teaching them, teaching them how to fish instead of giving them the fish? Teaching them how to fish instead of giving them the fish. So that is why that is in the morning. It's just a 2 hours class. So you can still go and do your Lovers Day after class. Okay? You can do your Lovers Day after class. Okay. So I said I was going to tell you my story before I close today's live. So my story, how did I start investing in Canada? I already told you my story about how I grew up understanding money from my parents, right? I started my business when I was 14 and the likes. So when I came to Canada in 2020, I loved the idea. All of us, we love to have real estate, right? So we lived in an apartment when we came to Canada, myself, my husband, and my 3 kids. So when you just, this apartment blocks, that there are so many blocks there. And I'll just sit at the balcony. I'm just wondering, God, if I can just have one flat of all this apartment, just one, and just be taking rent from the tenants. And my day, I went to check, okay, how do you even go into real estate? When I saw the price, I ran. I ran back. Like I could not, it's not something I could afford then. I didn't even start working. I came to Canada in July. I didn't start working till like December. So, of course, money has finished. So one day, as I was just walking the streets, I saw somebody teaching like this, and the person was talking about REITs, which is real estate investment trust. And I told myself, can this be true? I just said, okay, let me try with $50. And I tried with $50. And lo and behold, the following month, yes, I got my first dividend. And that was how I started my investment journey. And I'm so grateful that I started my journey that time, because I know what I've built over the years. I know what I've built over the years. So, what is that story telling you today? Start today. There's nobody that will keep giving the excuse that nobody taught us about money. When we were growing up, nobody taught us about money. Fine. But since this year, or since you've been walking the street of social media, you must have heard about money, how to make money, how to invest money, how to manage money. You must have heard about it. The question to you is, what have you done? What have you done? I've told you technology has made it so easy to invest any amount you have. You have $10, put it in the market. Let it be working for you. You have $20, put it in the market. You'll be shocked. I was talking to, was it last Saturday? I had a session with a 18-year-old. The mother came to our live session like this, and she said, oh, I would like you to do a one-on-one with my 18-year-old just to set up our investment portfolio. And that was what gave birth to this 18 to 25, right? And this 18-year-old, she already has $5,000 in a savings account just sitting down there. A savings account just sitting down there, paying out 0 point something percent, paying out less than 1%. And that day, we were able to set up our account. We chose investment for her. Okay, start with this investment. And I told her, I said, in 12 months' time, you're going to buy your mom a gift, because you would not believe that right now, what you have done, you are above 99% of your peers. 99% of your peers. So I know a lot of people on this call today, you have money in your savings account. You're just living in there just because you're scared of the market. But I'm telling you, put something in the market and see what the market can do for you. See what your money can do for you. Just imagine that, okay, even if you have money and you're so scared, I've told you, the wealthy will not put their money where there's no money. So if they put their money in the stock market, it means that there's money in the stock market, just that they are doing it the right way. And how are they doing it the right way? They might not learn the skill, but they will employ somebody that has the skill. They will not learn the skill, but they will employ somebody that has the skill and pay that person to do it the right way for them, right? So I'm telling you, learn the skill. Learn the skill so you don't have to pay somebody that already has the skill, because the money you're paying that person, you can use it to also invest. All you need is learn the skill. Invest stock market is not complicated. All you need is for you to learn the skill. Now, it's time for us to close for today's evening. Do we have questions? Do we have questions? Thank you for the follow. Okay. Now, I think I'm seeing R. Thomas, 1926. Yes, I think that's what I'm saying. I'm not wearing my glasses, and it's very tiny. So do we have questions? Do you have questions, R. Thomas? I'll be ending the live soon. I need to go and do my duties. Okay. So I come on live like this, evenings like this. I come on live to teach about investing. Yesterday, we had a very beautiful session where we talked about, is one income sufficient? Oh my God. If you've not seen that, it's on my YouTube channel. My YouTube channel is Sifawu. That's my first name and my last name. it's there where we add a very nice session. Is one income sufficient? Is one income, can one income sustain? So I have a question coming from Maxine Saint Ottawa. How can we invest in a tax-free savings account? So I want to believe you're in Canada, right? So if you want to invest in a tax-free savings account, you're going to open your Wealth Simple. That's what I wrote there, Wealth Simple, right? Download your Wealth Simple app, and you can use that referral code. You will get $25. The referral code is 58TJJQ. When you download it, you're going to see where you have, when you download it and you're creating your profile, you will see where you have stock, ETF, stock and ETF. You're going to select that, and you're going to select self-directed. When you select self-directed, you see options for various accounts. You see checking, RRSP, TFSA, so many accounts. So you will choose your TFSA. But you need to select, the first thing you are selecting is the stock and ETF. Stock and ETF is the first thing you're selecting. Then you're going to see various accounts. Then you're going to choose TFSA as the account you want to open. And once you open it, you move money from your checking account, from your bank, into your TFSA account, and you invest it in the stock market by buying stocks. If you move money into the TFSA, you don't invest it, you've only put money in a savings account. But when you now buy the stocks from the stock market, that is when you have invested. Okay, I hope I answered your question. Did I answer your question? Yes, no, yes. Like I was saying, I come live this evenings like this. Okay, thank you. Yes, you did. Thank you. So I come live evenings like this. If you want to join me on live, if you've not followed me, please do follow me so you know when I'm live again. In case if you have questions, you can come into the chat and ask your question. Thank you for the follow. Like, how much can you start with? Start with any amount you have. $1,000, start with it. $200, start with it. I'm answering Grateful. Grateful is asking, like, how much can you start with? Start with any amount you have. I've told you can buy fraction. So even if you don't have the, if a stock is selling for $100, but you can't afford $100 now, any amount you have, buy a fraction of that stock. Okay? Yes, start with any amount you have. If you've not followed me, please do follow me. I want to thank everybody for joining us today. Thank you for the likes. Thank you for the questions. Thank you for the engagement. That is what makes this live interactive. And if you want to start your journey, you're looking for somebody to hold your hands, I am here. I am volunteering to hold your hands. You can register through the link in my bio. And if you want a one-on-one session, send me a DM and I will send you the link to register for my one-on-one session. Okay, till I come your way tomorrow by God's grace, evening like this, or I'm seeing if I can do 12 p.m. as well, but I'm not sure I'm not that disciplined yet. God will help me. But evening like this, I'll try to be on live show. Okay, so till I come your way again tomorrow, I hope you will remain blessed, and I want you to start your investment journey today, right? So that you can have a testimony for staying on this life and for just taking that bold step in 2026. Do something different. That's the only way 2026 can be better than 2025. If you're doing the same thing you did in 2025 with the expectation that things will be better in 2026, then you might be deceiving yourself. So take the bold step. So have a lovely evening and God bless you. I'll see you guys tomorrow.